Hi, everyone. Welcome to our panel on innovations advancing worker and student financial health. My name is Adam Hartman. I'm the director of the Financial Solutions Lab Accelerator here at the Financial Health Network. I'll be moderating today's discussion. Before we get started, I just want to share a few items. We provided closed caption capabilities for those interested, so please see the directions provided here. We'd also like to encourage all attendees to submit questions through a Q&A box at the bottom of your screen. We'll be monitoring your questions throughout the hour, and we'll make some time to respond to as many as possible. And just as a reminder, that at the Financial Health Network, we abide by and require our members to abide by both the letter of the spirit of antitrust laws. This includes discussing and disclosing pricing strategy, output, or other terms. Participants should not engage in any exchanges or disclosures of competitively sensitive information. While we want to foster an open dialogue, let's all be aware of staying in the bounds of these laws. So with that, again, welcome everyone. I'm very excited about today's discussion and would like to introduce you to our four panelists. I'm joined by Angela Seresny, CEO of Climb Credit, Lori Shao, CEO and founder of Finley, Will Seeley, CEO and co-founder of Summer, and Saket Karuri, head of product of Equity. So as a point of background, the Financial Solutions Lab is a $60 million 10-year initiative managed by the Financial Health Network in collaboration with founding partner JPMorgan Chase and with support from Prudential Financial. The lab's mission is to cultivate, support, and scale innovative ideas that advance the financial health of low to moderate income and historically underserved communities. The lab has three flagship programs. The Accelerator, whose current cohort is being featured today, focuses on scaling promising early stage fintech companies. The nonprofit Fintech Exchange, which seeds partnerships between nonprofits and fintechs, and the Collaborative, a forum for stakeholders to ideate on solutions to unmet challenges. Every year, the lab launches a challenge focused on pressing financial health needs. For this year's challenge, we've recruited companies solving for worker and student financial health. We chose this topic because the American workforce faces unique challenges to improving and achieving financial health. The opportunity to complete quality post-secondary education is a key component to empowering consumers to gain access to high-quality jobs. However, with cost of education at an all-time high, access to those opportunities are increasingly hard to come by. For workers that have taken on the cost already, they're carrying financial burdens that may leave them vulnerable to economic shocks and inhibit their ability to upskill. Workers also need products and services that effectively assist them in simultaneously managing their educational and work lives, especially in the light of rapidly changing working world due to COVID-19. This year's Accelerator was also the first to feature entirely virtual programming, as nationwide city and office shutdowns began during our final cohort selection. While we weren't able to conduct our in-person events and programming with these companies, we pivoted to provide personalized support plans and partnerships to maximize the value of their participation. During this panel, you hear from innovative groups of fintech companies, Equity, Climb Credit, Finley, and Summer, who comprise the Financial Solutions Lab Accelerator's 2020 cohort focused on worker and student financial health. So we'll aim to share how they've had to innovate in meeting changing customer needs as a result of the pandemic, what new trends and challenges they're seeing in worker and student financial health, and how they're addressing them, challenges and solutions to navigating a volatile economic environment as an early stage fintech. So with that, I'd like to dive in and ask the panelists to please share a bit about their company and their particular solution. Angela, can you start off with Climb?
Sure. Thanks, Adam, and thank you to everyone who's here. I feel privileged to not only be a part of this cohort, but to be here today presenting to everyone. My name is Angela Seresny, and I'm the CEO of Climb. We're the leading provider of payment and financing solutions to the large and growing alternative education market. We provide the tools to enable the schools that offer high ROI education that our economy needs more than ever now to streamline their checkout infrastructure and offer the best configuration of payment and loan options for their learners. The schools we work with educate over 100,000 learners every year into careers that, on average, increase their earning potential by nearly 70%.
Thanks, Angela. Sanket?
Thanks, Adam. And a pleasure to be here with all of you. My name is Sanket Karuri, and I am the head of product at Equity. In the wake of COVID-19, we ramped up our platform, which streamlines the distribution of millions in emergency aid to low-income college students for our partner orgs. We meet students at that point of emergency using our proprietary algorithm to save institutions hundreds of thousands of dollars in staff costs to decision what funds need to go to the neediest students. And all the while, to all of those students that we can't fund, we're able to connect them with local resources that meet those basic needs. It takes about 7 minutes to apply, 4 hours to receive a decision, and that bank transfer starts within 24 hours. And through reporting, we help institutions quantify the barriers to college persistence that prevent students from degree completion, and help them raise additional funds and reallocate student support staff in service of those students' educations.
Thanks, Anket. Lori, do you want to discuss Finley?
Yes, thank you so much for having me. I'm Lori Shao, the CEO and founder of Finley. At Finley, we set out to pretty much democratize education and transform the future of work for educators. So if you are a skilled individual today and you want to impart your wisdom to the masses, you really have 3 options to pursue this as a career. The first one is you become an employee at a school, a center, or a studio. The second option is you teach on an out school, a VIP kid, Airbnb experience, right? One of those amazing marketplaces out there that is gaining popularity, and it's a great fit for many, but you do fit into a mold and you give up 30% of your revenue before it even hits your account. But what if you actually have a book of business? And what if you want to grow that book of business? And what if you want the flexibility to teach on site, online, in a pod, in your home, in a park, right? You want the flexibility of being your own boss. And that is precisely where Finley plays. We provide the tools to help small business owners and micro entrepreneurs in education manage and scale their businesses. We all know that just because you can play 50 musical instruments perfectly, it does not mean you can run a successful music school, right? And on the macro level, we are here to, I think, especially during recent times, we have all experienced and witnessed more now than ever the challenges of when it comes to accessibility, affordability, and outcome when it comes to education for all. And institutions are great, but they're also very bureaucratic and slow to move. And at Finley, we believe that it is the SMBs and the micro entrepreneur educators that will fill these gaps most effectively. And so we are providing them the tools to do so. So if you think about it, we're more like the Shopify for educators. Thank you.
Thanks, Lori. And Will, could you provide an overview of Summer, please?
Thanks so much, Adam. My name is Will, and I'm the co-founder and CEO of Summer. Summer exists to help student loan borrowers maximize their savings by navigating the complex student loan repayment landscape. We're tech-enabled and human-centric, and we do this through a variety of ways, syncing your loans, making sure that we are testing all of the different eligibility that you may have across over 100 different federal, state, and private sector forgiveness solutions and loan assistance solutions, and then actually enrolling you in those programs and forgiveness plans that can maximize your savings. The results that we're achieving are quite fantastic. We have a $300 a month reduction to borrower student loans and a projected average lifetime savings of $30,000 per borrower. What we're doing is partnering with employers, financial institutions, trade associations, unions, and many other different entities that have borrowers in their communities and want to create those savings opportunities. I think many recognize that student debt is an incredibly pressing societal issue. 45 borrowers are on the hook for $1.6 trillion of student debt. People have federal loans, they have private student loans, there are parent loans. The complexities are profound. Almost every single loan company in the student loan sector has been sued at the very highest level of those that have contracts with the federal government. The federal government has been sued extensively for problems in this space. So we're not only providing technology, but we're an ally to the borrower. We help them actually get enrolled in these programs and make sure that they do in fact get forgiveness, helping them think through their long-term financial plan. How do they one day afford a mortgage? How do they also think about maybe one day getting a car? By freeing up that cash flow, we're helping people achieve their biggest financial milestones. And we're doing this with tens of thousands of borrowers already. Thanks so much.
Thanks, Will. Really appreciate that. And thanks to all the panelists for providing your overviews of the companies. Just a reminder of the audience, please, send any questions through. I'll be asking the panelists some questions about what they're working on right now, but definitely want to hear from you all as we move forward. So, question I have for the whole panel here, and love to get your thoughts. So, what are some key issues that your customers are now facing, especially due to COVID? And how have your companies adjusted to meet their changing needs? And I guess we'll start in the kind of same order that we did the introduction. So Angela, can you respond to that?
Sure. Thanks for that question. I would say that, thankfully, Climb's business and our learners have been spared some of the terrible job losses and issues that have been felt by the sort of more traditional service and hospitality industries. The primary career paths that our learners enter by going to the programs that we've partnered with are technology training, so technology jobs, healthcare jobs, education-related jobs, so teacher training, and then general trade skills. And while certainly we've seen some sort of weakness in all areas of employment, those sectors actually have remained relatively stable compared to, as I mentioned, hospitality and the others. What I will say is as soon as shelter in place started, so kind of that mid-March date that I think everyone remembers from their own experience of realizing that maybe we're going to be leaving the house for a while. The first action that we took as a business, aside from making sure that all of our employees were safe and able to work remotely, was to negotiate with our counterparties a full forbearance for our learners with no interest accrual for 2 months, no questions asked. What we did was we advertised that forbearance to all of our sort of learner demographic and let people opt in. And what I'll say anecdotally about that is that of the borrowers who did opt into that program, which it was in the single digits of percentage of borrowers that we have, most indicated that if they had lost income as a result of COVID, it was either losing supplementary income. So an example of that would be a teacher who also does tutoring on the side, losing the tutoring income, but still having their teaching job, or a spouse losing their income. And so what I would say is, as a result of some of the stability that we've seen in the job market of the careers that people go to with Climb, we've also seen continued sort of repayment performance as we would also expect. I would say stable repayment performance. It hasn't taken some of the dips that you might have seen in the prior recession through in consumer lending portfolios. And the other thing I'll just say is that we track the outcomes of our programs. So as a reminder, we become sort of the payment and checkout layer for our schools, and therefore have a relationship with all the students that go to those schools, and we survey them on a fairly regular basis. And in our first survey post-COVID, we found that the job placement rates had remained relatively stable as to pre-COVID.
Thanks, Angela. Sanket, could you respond to that question as well?
Yeah, no, thanks. Thanks, Angela, for that response. Even before COVID, the landscape for our stakeholders was pretty grim, right? We work with community colleges and their students, and there's a widening gulf in this country between the life outcomes for those that attain a degree and those that don't, in terms of financial outcomes, but really more and more in terms of physical and mental health outcomes, right? Life expectancy, suicide rates. And so pre-COVID, we knew that these small dollar issues of housing insecurity, food insecurity were a huge barrier to degree attainment. But in the pandemic, we're seeing that for community colleges in this country, anywhere from 42 to 56% of students face food insecurity, 46 to 60% face housing insecurity, and 12 to 18% are homeless, right? So the leverage that those small dollars, that $500 grant has, is even greater now. And in response, we've had to focus on a few pieces to ramp up because our students are facing sort of unthinkable circumstances. The first is scale, right? We needed to reliably automate more and more of our automations to enable our relatively small staff to serve not hundreds of students, but tens of thousands as that need grew with funding like CARES and foundation funding coming in. Then we needed to, again, go deeper into the problem, like focusing on depth of service, right? Our interactions from student support interactions, the language we use, our user flows, everything needed to become more thoughtful, sensitive, and helpful, right? Because at the end of the day, there are students applying for money to avert crisis. We've had to get into the field to understand what really works and what's just for show in terms of providing students resources. And then there's a really important reporting element to our work, right? We have a very rich data set in terms of the nuances of the situations that students are facing. And we've had to learn to leverage that to give context and color to the stories of everyday college students in this pandemic, equipping our partner colleges and our foundation partners to raise more and more funds to be able to describe this problem in more and more detail to get more and more funds out the door.
Thanks, Anket. Appreciate that. So, Lori, you want to
Sure.
discuss how you guys are responding to COVID?
Absolutely. Given that our target customer base are the supplemental programs to K through 12, so the after school programs, daycare centers, enrichment centers, right, music, tutoring, and so forth, that entire market has been, and it continues to be, devastated by COVID. As you can imagine, for a small business owner, they on average have 4 to 6 weeks of cash in the bank to sustain themselves. And when they are forced to shut down, it is more than them not being able to hire the next employee or think strategically ahead. It is them not being able to put the lights on and put food on the table. Again, this entire market, our customer base, just was absolutely devastated as an impact of COVID. And one of the value add or the solutions that Finley was able to provide as a part of our overall suite was we help these traditionally offline schools migrate their offline curriculums to online, and we were able to create Finley classes. So what this means to the small business owner is, prior to Finley, their sense of an online presence is claiming their Yelp business page or creating a PDF flyer of their services and post it on different Facebook groups, right? And that's pretty much the extent of it. Or if you go on Yelp and you look any of these, whether it's tutoring center, after school program up, and you click into any of the websites they have, it's just extremely not well done and not very intuitive. And so what that posed to us is, overnight, the embrace of digital transformation was very apparent. These small business owners in education recognize, in order for them to survive through this pandemic and adjust to the new normal, they absolutely have to reach a wider audience greater than the 5-mile radius of their brick and mortar. And so Finley, through Finley classes, we enable them to provide their services to anyone, anywhere, and collect payment in the most frictionless way from anyone, anywhere, anytime. And so that's one of the things that we were able to implement very quickly to our customer base. And second, we recognize just because they go online, it does not mean their customers follow. Right? So we have to help them find new customers. Our client base are not the social media influencers. They don't know what SEO is. Like, they're just, yes, we give them the tools, but now let's take one step further and help them acquire customers and business. So then we set out to partner with various corporations out there, and corporates are in a pickle, essentially, right? Because their office happy hour budget, their employee wellness budget, their bonding budget, it's all kind of just sitting there. And so how do they help their remote workforce be engaged and for their wellness? So they sponsor and pay for Finley classes for their employees. We just brought on a global Fortune 100 company just last month, where not only are they providing Finley classes for their employees, but also their employees' kids who are struggling with distance learning. And what this means is every single class on Finley classes is taught by an instructor who is the owner of a small business in a community that is struggling to put food on the table. And so we are achieving that win-win by bridging this gap. Yeah, so these are the two things that we did during COVID very quickly. One, to help our clients move offline to online and really embrace that digital transformation on every aspect. And two, help them drive revenue by connecting them with corporate teams and partners that were able to sign up very quickly to support community growth and help small businesses. Yep, thank you.
Great. Thanks, Lori. Appreciate that. So, Will, could you chat a little bit about how you guys are responding to the outcomes of COVID?
Thanks, Adam. I think, as everyone on this call probably knows, COVID-19 as a pandemic has created a second crisis on finances. We've heard that from the other panelists. There's been obviously a very significant impact on the 45 million student loan borrowers. What many are probably familiar is that President Trump had announced in really early on in the pandemic a freeze on all payments and interest accrual for direct federal loans. What people may be less aware of is the fact that many borrowers still own commercially held federal loans that were not frozen. There are 9 million borrowers that have those type of loans, and those loans are still due today. Borrowers are still paying them today. That is also the case for anyone with a private student loan, where their lender, who chooses on an individualized basis whether a borrower gets some sort of relief if they're experiencing financial challenges, those loans are still due as well. We estimate that tens of billions of dollars this year will be spent by borrowers on their student loans. And so this remains a pressing financial concern for many, and one that we're worried can put someone under who's already on the bridge of financial collapse. We know that as a very common statistic, if people are unexpectedly hit with a $400 payment, a majority of Americans cannot afford to cover it. When hundreds of dollars are being deducted from someone's bank account every month to cover student loans, that makes them even more precarious, as we saw nearly 45 to 50 million people unemployed. You have a real problem with people not being able to cover the payments in their lives. And at some point, they're not going to be able to cover everything, the mortgage or the rent, covering their healthcare costs, covering food and necessities, and also maybe a car loan payment, credit card, as well as a student loan. Inevitably, student loans are unusual in this space because when you can't pay back your student loan, it's incredibly hard to declare bankruptcy and come out of that situation in a financially stable way. And so what that means is the student loan acts in one's life as a thing that's going to be deducted from your money and your finances one way or another. And we've seen that close to 1 in 5 borrowers have experienced default on their loans. And when they do, a lot of times that can lead to wage garnishment, and the money is taken out of their bank account via the IRS and the Department of Education's authority to do so. And so this creates a very, very precarious situation for millions of people. What we're doing at Summer is we are teaming up with state governments. We've teamed up with 4 state governments to date: Connecticut, Rhode Island, Pennsylvania, and Iowa. We're teaming up with the governors and attorney generals in these states to provide Summer as a service that we can rush to frontline borrowers who are at risk of default and ending up in this very dangerous situation, and ensuring that they have the tools and resources they need to either negotiate their private student loans into a more favorable terms and services so that they can get through this tough time, or that they can enroll their loans in an income-driven repayment plan that can significantly reduce their monthly payment. We have to remember that in 2021, loans will come due again for all direct loans, which will add a further burden for millions of people. And it's really important to get those borrowers prepared for that incredibly historic and insane moment in time where 40 million people will owe hundreds of dollars at the same time. And so what we're doing is we're working with more states, we're working with employers, we're working with unions and organizations to get our product out to tens of thousands, if not hundreds of thousands of borrowers, so that they can enroll in programs like income-driven repayment in advance of January, so that when that bill comes due, instead of it being $500, it may be zero if they're unemployed, or a lower amount of around $50 or $100, depending on their finances. So we've done a lot more beyond that, but that's the thing I wanted to highlight now. Happy to kick things back to you, Adam.
Thanks, Will. Thanks, Will. And that's a really impactful way of identifying individuals who really need that support. And in response actually to some of the questions we're getting from the audience about kind of customer acquisition, like how are companies trying to engage customers and to kind of expand their client base. And I think that really helps kind of illuminate what Summer's doing. And I guess just to kind of hear from another company on that specific topic, Angela, would you be able to kind of just chat a little bit about how you guys think about customer acquisition?
Sure. Yeah. So we our business is a B2B2C business. So the first sort of customer that we have to acquire is the school, because we only provide payment and financing options to students who are attending schools that we've actively partnered with. And so really, I would say the acquisition of schools is a typical sort of B2B acquisition kind of program where we have some outbound, some inbound. Back when you could do this, we attended conferences, that sort of thing. But one thing that I'll say, we have one layer that's added to our kind of B2B acquisition sort of framework, which is a diligence process. So before we actually do work with a school and give them our sort of platform to help enroll more students and have more affordable and accessible payment options and financing options, we make sure that the outcomes at that school make sense relative to the cost of the program. And so that really is, like, I think, where the mission part of our business, it really sort of is most critical, because there are a lot of schools out there that claim to be doing certain things, or maybe, have a lot of students going to them, but wouldn't be programs that we would feel comfortable providing accessibility options to. So that's the first part of user acquisition. And then the next part is on the learner side, right? And about 90% of the learners that we work with come from the schools, because the schools obviously have ways of sort of attracting people into their network. But we do some sort of B2C work around sort of educating people on the market we support and what the outcomes they can expect are, and believe that over sort of the long run of Climb's business model will evolve and invest more and more in sort of the direct-to-consumer business, both on the top end in terms of leveraging the data and the network of schools that we have to help people who are considering kind of trade and vocational career training, the right data and information that they need to do that, because it doesn't exist very well in the market. But then also, secondly, providing them with other types of financial services or support as they not only go through the program, but come out on the other side and have, now we're earning 70% more income and need other types of financial services like checking accounts, savings accounts, and credit cards, and helping to sort of educate and provide the right types of products throughout their life cycle, not just while they're in school.
Thanks, Angela. That's really helpful. You know, I know that we've been chatting specifically, you know, about like responding to COVID, but you know, while we're here, I mean, I think the audience is also just has like kind of a general interest in hearing like what are some of the just the general struggles that I think you all are kind of like facing, or challenges and about like prioritizing around like operating a startup and you know, just generally an uncertain and volatile environment. Be great to hear how you guys are thinking through that. Any kind of like specific like learnings that you've had, and then frankly, you know, what are some kind of key elements and resources that you know you're looking for to drive growth. Yeah, I guess it would be great. Maybe we would start with Sanket on that one.
Awesome, thank you. Yeah, the thing that sticks out when we think about volatility generally is that the consequences of emergency aren't an education problem, right? They are those consequences are an American problem right now, and the long-term effects are felt, and it's a really multidimensional problem. We're hoping and we're seeing that $500 cash transfers make a big difference, but as we have these interactions with our partners and students, everyone wants more, right? Folks want more money. They want more resources. Partners want more features and time. And so one of the things that we're trying to figure out within that is what to prioritize as part of our solution, what to equip our partners with in terms of data about the problem. But at the end of the day, it's all about figuring out how to amplify our partners' impact in their students' lives, and so that's one of the greatest problems that we face, COVID or without COVID. I think that one of the other pieces that we really need to pay attention to that gets into that are the mental health that students and even our own staff are experiencing, and being cognizant in our interactions as to the mental state of folks who aren't unable to meet their school payments, their rent payments, housing insecurity, and the mental health of our collective workforce is also certainly taking a hit in these times. And so listening and building time and space, both in how we interact and present solutions to students, but also in how we treat our staff, is certainly really important. And then the last thing I'd touch on is that there's always been sort of this top-down non-monetary resource sharing model where someone decides what the resources are and then they're shared. And what we're learning is that students don't care for those, right? They want to hear from other students. There's not a lot of trust in those sort of top-down resources because time and time again, they've been dead ends. And so taking time to understand that landscape and figuring out how to channel information flow between the right parties so that if we can't offer funds, we can offer connection to quality resources that are current and vetted.
Thanks, Sanket. Lori, would you like to take this one as well?
Sure. I mean, as an impact of COVID, I think one of the biggest struggles that we have, different than the other companies here on the panel, is that Finley is a very early stage fintech startup, and we are struggling with just as many, if not very similar, parallel struggles that our small business customers are struggling with, right? Things that keeps me up at night are we going to run out of money? We're impacting our customers in such a meaningful way, and it would just be such a shame, right? If we cease to exist one day and we can just poof disappear. And so that's definitely something that is really pressing for us, because we are living the struggles of our clients, because we are pretty much one of them. And I think another issue with the impact of COVID within our own organization is that we're a very small and nimble team. I mean, we're a team of 10 compared to to other companies here on the panel, and we are we all know each other, but we're still getting to really get acquainted and get to know each other on a deeper level. And then all of a sudden we have to be working in a remote manner, and to have that sort of connectivity and trust in the remote working space as an impact of COVID. And when, even one of our team members was diagnosed with COVID, there are a couple of members that were impacted more on a direct way. It's just an ongoing struggle for us to make sure that, one, we're providing the right resources for our target market. Two, we're continuing on the innovation where we are, having to make sure that our own company is, defensible and profitable and have a very clear future ahead of us. At the same time, being able to raise the capital, and then at the same time, making sure that our existing ship is not leaking. So at the end of the day, I think this is just a testament to, to all the startup founders out there and all the struggles that we are enduring, but we're in it together, and the future is bright. So it can only be brighter from here on.
Thanks, Lori. Yeah, and it's a really strong, it's a really important kind of challenge that you guys are taking on to kind of support some of these small, entrepreneurs, small businesses, that are being so acutely affected by COVID, and really trying to kind of boost their ability to survive. Will, it would be great to hear kind of your thoughts, again, beyond just kind of COVID, like what's kind of keeps you up at night, and what's kind of a key point for driving growth for you all?
Yeah, I actually really resonated with what Sanket was saying in terms of, like, there's always more features you can build. There's always, different customers with different demands, and, how do you build the business to align with a clear vision, especially in an environment that none of us could have predicted, which is a mass pandemic that has created a mass economic challenge for so many players in this space, where teammates are remote, people are getting sick, people are worried about their finances. It's a hard time for sure. And I think I obviously don't think of that just in terms of the features we're building. It's obviously how you run the company, but I had that on my mind because we had our board meeting this morning, and we were talking about just how many things are up in the air in the student loan space, right? You have the potential that Donald Trump is reelected, and he has shown very little concern for student loan borrowers in this space. It's very possible that loans will become due in January, as they're slated to do, and 40 million people will face this financial concern and have to deal with it ASAP. It's possible that Joe Biden would be elected, and he's spoken much more assertively about giving relief to student loan borrowers. It could be in the form of a further payment pause. It could be a forgiveness amount. It could be a change to the programs that exist today. The IRS is considering tax favorable contributions to employees' student loans if those contributions are made by employers, creating a new 401k for millennials and Gen Z. Employers could run at the opportunity to give money to their employees to tackle their student loans, especially if it's tax-free or tax beneficial. That could happen too. The possibilities and between all those are myriad possibilities. Building a company with the confidence of knowing you're choosing the right path and the right focus and the right problem area is difficult for any company and any startup. Doing it in a space that's so volatile and subject to be impacted by the state of the economy, decisions made by the IRS, the potential for a different presidential administration, that's endless. So how do we sleep at night, I guess, is the question. Miraculously, we do. The one thing that we know isn't going to change is student loans will continue to be a problem, and Summer will continue to help borrowers navigate it. One of the things someone once told me was, they said, the Dodd-Frank Act will fundamentally change the entire financial landscape. You know who's going to win? And I was like, who? They're like, the attorneys. And I was like, why? And they said, well, the attorneys, you know, if the law changes left, right, up, or down, everyone goes to the attorney to ask what to do. And I think at the end of the day, no matter how the student loan environment changes, not that I like to compare myself to an attorney, no offense, Adam, who has a law degree, but I will say that, you know, there is this emphasis on the role of a financial advisor increases when turbulence ensues in terms of a constantly changing environment. And what we found is when borrowers find that they have some loans due and some loans not due, they turn to us with increasing urgency to say, what do we do? Because the federal government's not giving me guidance. My loan servicer sure as hell is not. My parents don't know. I don't know. I can't find a single blog on Google that's telling me, help me. And we're there, and we're a trusted source of information. We've built that trust. We've put a lot of emphasis on that. And that is a certainty that we have so that no matter what happens, we know that we will continue to form that trust, continue to be that advisor, continue to share in that borrower's experience and decision making so that they can continually optimize for the best decision for them.
Thanks, Will. I appreciate that. And I guess, Angela, I'll put it to you. It would be great to hear your thoughts on, you know, just more broadly, you know, as kind of running a kind of a fast growing company and, you know, having to kind of deal with, you know, managing like a large workforce, you know, what are some of the kind of the key things that, you know, you are encountering and that, you know, kind of take up a lot of your time or that you're really, you know, really keen on addressing as you kind of scale Climb?
Yeah, so first I would say that it's sort of changed as the, I guess, the environment or the like stage of the crisis, as you will, that we're in has changed. When the initial shock of what was going on, again, like kind of that mid-March, I'd say mid-March through kind of late April time period, the real kind of key learning for me and my main focus was just on like my main focus was on navigating the crisis, right? Like making sure that we just like survive day to day. And I think the key learning there for me was like not to be shy about changing the priorities and objectives that I had set pre-crisis. So I'm someone who wants to stay the course and not change priorities that often. Because I do believe that, and from my own personal experience and, you know, the stage feedback you get from, or kind of, I guess, thought leadership you get from a lot of other executives who have been successful is that one of the things that can cause an early stage company to fail is like a lot of thrashing around with limited resources. That being said, I do think when there's like an actual substantial crisis at hand, like the one we're in, you sort of have to throw that advice out the window and set yourself up to be successful in the new environment. And so for Climb, the answer, I think, was, you know, one, making sure that we were like doing the right thing for our learners who are now, and borrowers who are now in like a completely different economic circumstance than they were before, making sure we're supporting our schools, like some of them are in person. What does that mean? How do we make sure that we're supporting them while also like making sure that they're still delivering the education that they say they're going to deliver despite now not being able to do it in person? So that was really, and then like also making sure all of our counterparties and capital partners were comfortable with the way we were approaching all of that. And so I would say like the first few months was like, everyone at the company, drop what you were doing. These are the priorities, right? Because that's a survival. But then I think on the other side of that, or like as we're going through that, there's always, you need to devote some resources. I did 75-25 in terms of priority or like kind of time spent, 25% thinking about how you're going to emerge from this thing with strength, right? So like, I think there's some adage like, don't let a good crisis go to waste or whatever, but like, you don't want to come out at like, you're going to come out and the world is going to be different. What does that mean for your business? And like, how do you make sure you're addressing whatever the new needs are? And I would say for Climb, the answer there was that the education we support, the high ROI skills training, right, is part of the answer to the now shockingly high unemployment that we're seeing basically overnight. And so, and then in addition to that, the people who need that education are going to need affordable and efficient payment and financing options more than they might have pre-crisis. And so for us, the real question was, while we're figuring out how to survive this thing, how do we make sure that we're set up to like capture that demand on the other side and make sure we understand the changing needs of both our schools and the learners who are attending them, and that our product is evolving in that way. So, and we've successfully done that. We've launched new products over the last 3 months. We've brought on a lot more new schools and seen really, really high demand for the type of education that they're providing, which we believe is a tailwind from the high unemployment rate, and just like a general orientation towards like, how do I find education I know is going to pay, so I'm not saddled with a ton of debt and facing some of the challenges that Will mentioned earlier, that we know are incredibly prevalent today and will likely become stay prevalent for a long time. So.
Yeah, no, that's really helpful. Yeah, thanks, Angela. And yeah, and yeah, servicing, you know, these customers and giving them like the right kind of suite of products is, you know, very key, especially during this time. And, you know, carrying out like the proper communications with them and ensuring that, you know, you're hearing back. And, you know, and specifically on that, you know, kind of want to actually ask Sanket this question. Something kind of came through is like, how important is kind of customer transparency and kind of communications like during like these difficult times? And like, how are you guys addressing that?
That's a really, really great question. And, you know, as Angela was saying, we're also a B2B2C model. And so there are our direct customers, which are the institutions that we partner with. And then there are the students that our app then serves. And so everyone, if you imagine that institutions are facing real budget cuts in terms of staff and ability to worry about a lot of the problems that they're facing. And then those problems in terms of enrollment, in terms of those who are enrolled, what they're facing in terms of the barriers to degree attainment are growing, right? So there are fewer people to do, to address more. And so there are a few dimensions that we really have to account for. First, we have to look at, right, how can we, with the data that we collect from students, with the way that we architect our system and the features that we build, help a shrinking staff do more, make them more effective in their reporting, make them more effective in their day-to-day operations, not just with deciding on who's going to get emergency aid and distributing that emergency aid, but deciding who faces what risks in terms of retention towards next semester, towards that degree. And then on the student side, the first key that we've learned in all of this is to stop and listen, and make that space within our product for students. You know, we recently changed the language, insufficient funds, right? Because it was a trigger around having a zero bank balance or a negative bank balance, and that's not what we want to affiliate with our app experience. And so we're working on new language there, but with students, you have to first listen, and then a lot of it is channeling. Students are doing incredible things for themselves and in their own communities, right? There are mutual aid groups and groups all over on campuses everywhere that are trying to solve this problem themselves, right? And so instead of taking too much of a top-down approach, we're really going to student groups, those sort of super users, the students who do a lot of organizing and facilitation themselves, to say, how can we build a feature set with your institution that amplifies what your group is already doing, right? When we can't provide money, can we amplify the reach and the impact that your groups have?
Thanks for providing that. I think the other thing, and we're almost at time, and I want to ask a couple more questions that came through that I think would be, would be really interesting to hear. and it's some of it's also just kind of related to kind of like internal operations and how like people are adjusting to kind of the new environment. I guess Lori, I'd love to ask you, how how are you, especially in this virtual environment, like maintaining like company culture and communications? I think that's something that I think everyone on this panel, we've talked about it, but I'd love to hear how you guys at Finley are addressing it.
Absolutely. And I think it's different depending on the size of your team, right? We have a small team of 10. So I try to do my best to be informed and aware of everyone's situation. You know, it is a very fine line nowadays when it comes to encroaching upon people's personal space. And some may argue there is no sense of personal space when my kids keep running around in every virtual Zoom, as well as, you know, birds and snakes flying, because I have 2 boys. I have all these reptiles at home. Um, and so to have that sense of trust and support in a virtual state for a very small and nimble team, I think that is absolutely critical. So I do set up one-on-ones on a monthly basis with every single member of my team. And then we also have very, very interesting to Finley. We have a majority female team, so we have girl talk tea hour, and so, you know, all of us would get on Zoom and try to update each other on our lives, challenges, and triumphs. And in addition, we actually purchased Finley classes for ourselves as well. So if we want to do any type of mindfulness, like yoga for the team, I think recently, last week, we did a class that's taught by one of our clients that they teach improv. So how to act, how to present yourself in the best light on Zoom. And so all these things are super fun and engaging, and we're learning a lot about one another. And I'm just trying my very best to optimize, you know, the very limited resources we currently have, but to make it well intended and enlightening for everyone. Yeah.
Thanks, Lori. Yeah, I think we're all learning every single day. I can say for myself, and my where I think we're learning from you and learning from trial and error. So so we have time for one more question. I'm going to throw it to Will. Will, if in short, although this is a complex question, how do you balance your long-term product roadmap, you know, while still kind of innovating on kind of your current needs?
Yeah, thanks, Adam. I think I addressed this a little bit in my last response. I think we're really looking at the long-term arc of how do you holistically help student loan borrowers. Our product has oftentimes been compared to tax software that helps you figure out all the different ways that you can reduce your tax burden individually. And what that really means is, imagine if you were building TurboTax from scratch in 2020, what would you think about? You would have to actually weigh the considerations of depth versus breadth at all times, right? There are many different types of taxpayers. There are many different types of borrowers. So you'd have to think about, how is a small business owner's taxes going to be fundamentally different than an attorney versus someone working in the gig economy? And how would we actually create all of the tax credit opportunities and all of the tax savings opportunities for each of those verticals? And then how do we do that at scale and breadth so that you could cover 100% use cases? We look at student loans the same way. So we designated key proto-personas of the user base and have broken them down into ensuring that that proto-persona gets all of the different ways to save on their loans. So there's a fundamental difference between someone who's graduated with a doctorate or is a doctor. And those are fundamentally 2 different cases. The doctorate may be underpaid at a university and inevitably has that PhD, but it costs them a lot. And then they're really struggling to cover the costs. And that borrower would best be served by enrolling in an income-driven repayment plan, which would lower their monthly payments by $300, $400 on average. And that cash flow allows them to live their life. Inevitably, there is a different experience for the doctor who might have $400,000 of student debt, but is well on their way to paying that off over time because they inevitably are making more money as, say, a surgeon and feels more comfortable with their loans, that borrower might benefit from refinancing and lowering the interest rates down from 8% down to maybe the historic low levels we're seeing right now in the market around 3%. And being able for our digital product to triage those borrowers and funnel them down the right pathway is really the core capability of our product offering. We're able to take those inputs in from the user and then make a very clear recommendation of their pathway. And then the borrower comes back to us every 6 months to reevaluate whether if their situation has changed, should their strategy change. We've helped borrowers refinance multiple times, continuing to save money. We've helped borrowers fill out multiple income-driven repayment applications, the same individual, and we've helped people switch from income-driven repayment to refinancing when they're suddenly making more money. They went from an unemployed situation to a significantly better financial situation. So as we look at our roadmap, we're always doing a left-right sidestep on our product feature build. Okay, let's make sure we're optimizing for this proto persona. Let's go back to the proto persona we built for and refine and make that more robust. And then the combination is really an incredibly powerful depth and breadth product that stands out in the market as the true winner in this field for the best recommendation engine for any different type of user situation, no matter what your combination of student loans, no matter what your credit score, no matter what your income, we will be able to give you something that saves you money on your student debt.
Thanks, Will. Really appreciate that. Well, this is we're basically at time, so I just want to first off thank all the panelists for participating today. Really appreciate your time and insight. Our team, is thrilled to be working with all of you to support your missions. So we're looking forward to the next steps and continuing that work. And just thanks to everyone in attendance and your questions. Please note that we'll be sending out a survey at the end of the meeting. And I understand we weren't able to answer all the questions that came through. So in that survey, you'll have the opportunity to let us know if you want to connect with or learn more about any of these companies or the lab and our next challenge that we'll be announcing soon. Additionally, I want to let you know of some upcoming events. Please join us for our upcoming nonprofit FinTech Exchange virtual meeting on October 15th at 1 p.m. Central. During this free event, you'll hear from the 7 new nonprofit FinTech partners that make up our 2020 Exchange Grant Program, as they share how they're leveraging the unique strengths of nonprofits and FinTechs to improve worker and student financial health. As well, later in October, please join us for a free online on October 20th to 21st as we explore the trends shaping the financial health landscape, identify proven solutions, and share how to develop an effective financial health strategy informed by a culture of measurement. Again, thanks for everyone's time and have a great day.
Thanks, Adam.
Thanks, Adam.
Thank you.